We're all looking for green shoots in the economy, wherever they may be. The Nifty has rebounded smartly from March lows, indicating that the economic recovery has been just as sharp as the fall was. However, Bank Nifty has been lagging behind. We're now looking for positive cues out of Bank Nifty, some of which we got from Bandhan Bank and Federal Bank 2 days ago when they put out their Q1 numbers. And much to everyone's surprise, we saw that they managed to grow their credit substantially in Q1 despite multiple headwinds, and were able to improve operating profit. And in the case of Federal, even post-tax were able to increase profit despite a significant jump in provisions. We're now looking out for the big daddy of banks to put out its numbers tomorrow. HDFC will be releasing the Q1 FY21 official result. Now, the key things to look out for here for HDFC, as have already been flagged off by the Q1 update that was submitted a few weeks ago, is that as far as advances are growing, we have no concerns at all. They're seeing a 21% YoY growth, and even sequentially, they're seeing a 1% growth. Deposits are also growing very strongly and outgrowing peers disproportionately. That has resulted in HDFC Bank's CASA ratio being maintained at a very solid 40%, despite all the negativity we're hearing about in banking. Now let's move forward with the specific financials that you need to keep an eye out for. NII expected at 15,300 versus last year's 13,294, or last quarter's 15,204. So we're still going to see some improvement even on a sequential basis as far as NII is concerned. Coming down to PAT, we're looking at 6,400 versus last year's 5,500, or last quarter's 6,900. So okay, on the profit, we're going to see a bit of a hit because the provisions are likely to be higher. So that's been built in by almost everyone, but still a very healthy PAT number. At the operating level, we're looking at 12,300 versus 12,900 sequentially, and then versus 11,100 YoY. So YoY, there's no growth issues whatsoever. Sequentially, on the profitability front, there might be some mild hiccups. Now, other than this, factors to look out for are what the provisioning levels will be. HDFC didn't take that high of a COVID provision in Q4, so it could be slightly higher this time. Your NIMs are likely to moderate a bit because of pressure on the banking business in general. Credit cost is expected at 150 bips according to Nomura. And the loan growth, if at all, will be led by corporate according to brokers, and retail will remain stable. Apart from this, moratorium levels should have come down even lower from what they were for HDFC, which was never higher than 8 or 9%. From the management, what we want to hear about is any fundraising news in the pipeline, growth trends within the loan segments, outlook on the provisioning going forward, outlook on the NIMs, the growth and the credit cost guidance, and of course the slippages and asset quality concerns once the moratorium is lifted. So these are broadly the cues to look out for the HDFC Q1 number. We'll update you with more tomorrow.